Well, welcome back to Finance Uncut. On today's episode, silver price target of $80.
Yeah, so when we look at silver moves pretty interesting. It has these parabolic, these explosive moves. Gold's more of a grind where silver can really kind of just pop and take off in a huge way. And it becomes kind of a crowded trade, a Main Street trade. It attracts a lot of people who want to get into a speculative, really interesting, how to make a lot of money fast. And it's always had that. And that's why it creates these big movements. So when silver starts to move, which is why I'm a big fan of silver, I'm more heavyweight silver than anything else. When they start to move, silver could pop to that $45, $80 level, potentially even higher. You never know where these type of plays are going to go. You look at the last spikes that we've seen in silver over the last 20 years. I mean, when it spikes, the next one, we could get up to that $80 per ounce in silver, which would be absolutely amazing. And that's just based on kind of chart patterns and momentum. If there is actually some type of currency or some other type of issue, we could see it go a heck of a lot higher. But silver is kind of that, feather in the cap. If you've got it and it does pop, you're going to make a fortune. And that's why a lot of people have it. It seems like it's one of the most undervalued metals out there. It's just constantly pounded and held down, yet it's probably the most held. Everybody just keeps accumulating it. So I like silver, and it's got that explosive move. And that's why most of us have a good chunk of it.
So $80 silver, is it possible? Well, you guys that follow this channel will know that I have a price target of triple digit silver. I think we will get to $100 silver. And so I'm not selling my silver holdings, any of my silver positions, until we get there. But then I also will value that against other assets. So yeah, I always measure my precious metals, gold and silver, in other assets. And I've done a video on wealth cycles and how I've used that to really accumulate a lot of wealth. But I'm with Keith Neumeyer from First Majestic Silver, who is also calling for $100 silver. So $80 silver, that's well within my target. Now, I've shared that my target, I think, 2023 is when we're looking at $100 silver. It could be a year or so on either side. So it could come next year, it could come 2024. But in this video, I'm going to share some macro things that I think will push silver up, which will lead the institutional investors to pour into both gold and silver. And we're going to see a tremendous run in the gold and silver price, just like it did in the 1970s and just like it did in 2003 to 2008 and then 2008 to 2011. So let's get into it now. So in my last video, gold price would double. We had Peter Bookvar talking about interest rates rising, and that is bullish for gold. And I know many people were scratching their heads going, what is he talking about? Well, he's right. And that's what we're going to look at in this video. So here in this chart, we've got the Fed funds rate, we've got gold, and we've got gold stocks, which is the Barron's Gold Mining Index. Now, as you can see from this chart, when the Fed funds rate rises, we see gold rise as well. Now, there's a number of points I want to make in this chart. Number one, markets tend to discount the hike in advance. So at the moment, we're seeing that the market believe that the central banks are going to hike rates. Now, there's debate over how many rate hikes or how high the interest rates can rise and when that starts. So there's all that debate happening at the moment. The other thing is what we're seeing also is, I think it was the Bank of America investor survey that came back, and it was like 2/3 of investors believed that central banks' story around that inflation is transitory. And so there's the disinflation. So perhaps they think that rates might rise, but then we'll go into a disinflation, deflation, and interest rates will fall. The second thing I want to point out is that central banks and the Fed only hike rates when they are genuinely worried about inflation. If you go back and read all their statements on monetary policy, you'll see when they raise rates, when they go into an interest rate rising cycle, it is because they are worried about the acceleration in inflation. And when they do that, when they raise rates, they're signaling to the market that they are concerned about the acceleration in inflation, and that spooks the market, who believed it was transitory. The other point I want to make is real rates, especially in the 1970s, were still negative. So even when interest rates rose, CPI continued to rise even higher. And so we had negative real rates. And negative real rates have a very, very good correlation with gold. The other point, as interest rates rise, we see risk on assets such as stocks and bonds fall. So as bond prices rise, as bond prices fall, or as interest rates rise, bond prices fall. So, and the same thing can be said about stocks as well. So what will happen is, what has happened and what will happen again is that those capital flows that have been going into risk on assets over the last 18 months or so are going to exit those risk on assets. So, and I guess a final point, which is a follow-on from that point there, is I believe the best picture for gold and silver is higher interest rates, which means falling risk on asset prices, which means capital will flow away from that into risk off type assets like gold and silver. However, if we have CPI continuing to rise just as much as interest rates or higher, then we'll have negative real rates. So we'll have more capital flows going in. I think that is the best picture for gold. Personally, I welcome higher interest rates. Remember, miners at the moment have little to no debt, so higher interest rates won't have an impact on their profitability, on their balance sheet, etc. And so I think the miners will do extremely well if this macro situation plays out the way I think it is likely to play out. So, and if we have a look at the federal funds rate from May 2003 through to April 2008, you can see that the federal funds rate went from right on 1% up above 5% during that time. And we had CPI above 3% during that period as well. So at different stages, we actually had positive real rates during that period there. But as you can see from this chart, that even though we did have positive real rates, gold did move up significantly. But every time real interest rates went close to zero or went negative, gold really shot up. And so I think we're going to see something similar play out in the years ahead anyway, is we will see interest rates rise. By how much, that's debatable. We'll see risk on assets become less valuable, and we'll see those capital flows move out. I believe that we're still going to have CPI quite high, and so I believe that real interest rates are still going to be negative, which is going to be extremely bullish for the precious metals. And during this period, so I've shared this chart in other videos, so between May 2003 and March 2008, well, you saw in the previous charts what CPI was, what interest rates, what happened with interest rates. Gold went up 192%. Gold went up 192% during this time period. And if you bought the right gold miners, then they did even better, and then the explorers as well. And with silver, during the same time period, silver actually went up even more. It went up 332%. And the silver miners, well, I bet you all wish that you invested in the silver miners back then in that bull run. So anyway, that's what I think. I'm bullish the metals, in particular silver, triple digit silver, and those that go, oh, silver's $100 and, we'll be in hyperinflation, blah, blah, blah. Guys, seriously, that's so lazy. Go back to the 1970s. I've shared this in some of the comments before. Go back to the 1970s. Have a look at what the price of bread and milk and all those things were in 1970 to 1980, and then have a look at the price of gold and silver. Okay, the price of bread and milk and all that didn't go from 10 cents to $1,000. Okay, that's just silly. Go have a look at it. So this whole thing of silver can't go to $100, or we'll be in hyperinflation, and a loaf of bread will cost $1 million. It's just lazy, stupid, just ridiculous. So do a bit of history on this sector. Something that I've done, something that I know a lot of other people have done as well. But I do believe that we are going to see triple-digit silver. So $80 silver, absolutely. Obviously not financial advice, but it's all set up perfectly in my view. And so I welcome interest rates rising. Yep, sure, there might be a little pullback in both gold and silver if we have a bit of a liquidity event due to margin calls and all that, as people start to roll out and sell off their risk on asset positions. But ultimately, I think the macro picture, there's huge tailwinds behind the miners and the underlying metals, that's gold and silver. And I'm bullish. So I will be holding these assets that I've got, and I will be measuring them against other assets. And so I welcome risk on assets falling as my risk off assets rise significantly. And at some point, when I think the ratios are right, I will reduce my holdings in this sector and move into other assets. So anyway, guys, what do you guys think? Love to see your thoughts and opinions in the comments below. Do you think silver is headed to $80 or $100? I certainly do. But once again, that's not financial advice. Anyway, if you like this video, please hit that like button. Really do appreciate it. Take care, guys, and I'll see you again on another episode of Finance Uncut.